Good morning, everybody, and welcome to the Daily Energy Markets Podcast. It is the 10th of November, and it is 10:30 in the morning here in Dubai. And we have Brent crude oil trading a little bit up this morning, a little bit of a bounce, 50 cents, nearly 1% up on some sense of optimism that the U.S. government isn't going to commit suicide just yet, but keep your seats, keep the popcorn warm. Omar Najia, derivatives trader at BB Energy. Omar, do you care if the U.S. government is going back to work or not? Does the energy industry, energy trading markets world care?
Well, I mean, for entertainment value, I'd love to see it
I'm
kind
sure
of
they'll
go
be
up.
delivering something else pretty soon. You can be sure about that.
No, but I mean, on a serious note, I think there's real suffering in the US because a lot of people are not getting food stamps and all this kind of stuff. So it's really terrible. And these guys, haven't been doing anything for such a long time now. I think it's the largest shut down in history.
Mhm.
So they need to get back to work eventually. But I mean, I don't think anybody expects them not to. It's just a question of when, and the longer they spend out, the higher the probability that they go in. So I don't think if we're thinking that Brent's up 50 cents because they want to go back in, I don't think that's the point. I think the wider view
Mhm.
is geopolitically everything you look at from Ukraine, Middle East, Iran, Venezuela, Nigeria, they're all like, ready to kind of explode as opposed to, I mean, the probability is either they blow up or they stay where they are. And market is pricing in basically stay where they are. So you have all these risks out there. The fact that it's winter as well, and the fact that this, quote unquote, tsunami of supply that, the EIA has been talking about for, a very long time, and they keep saying it's coming, it's over the horizon, it's peaking, it's coming, whatever. Expect $50 Brent by Q1, and it's just not happening.
Let's go to Rachel Ziemba, adjunct fellow at the Center for a New American Security, senior advisor at Horizon Engage. Rachel, one of the sort of outstanding questions, and again,
Mhm.
sort of extracting from some of Omar's comments, is
Mhm.
the TACO, the infamous TACO of Donald Trump that Trump always chickens out, and I refer specifically to
Mhm.
the sanctions universe where we are at the moment, and the threat of some kind of a conflict on Venezuela. The sort of
Mhm.
stock, the buildup of the U.S. Navy in the Caribbean near Venezuela. There was reports over the weekend that
Mhm.
the Maduro government has offered to resign if they can get immunity. We've got these ongoing sanctions against Rosneft and the Russian companies blocking Gunvor's efforts to buy them. Where are we?
Mhm.
How serious should we take Trump's threats, sanctions on, and then counterbalance that with the infamous TACO? How are you reading those two things?
Yeah, so I think Omar's right. The market is assuming that that it is very much taco. I think on the Russia side, it's still not clear to me that Trump really wants to kick Russian supplies, offline. I think with on the gun war side, I think they went into the negotiations thinking it was going to be simple and easy. And I think what's going to ultimately happen is some sort of country by country solution, especially in the European Union and especially with the refined products. But that Trump's, intention is yes to hit, Russian revenue, but he doesn't really want, he wants non-Russian supplies to keep flowing. So I think we could see some different, regional solutions. With Venezuela, I do think Trump himself, I hope, has read some of the US history about how difficult it is
You
to,
can be certain he
uh,
has not done
yeah,
that.
Yeah, well, but I hope some of them, but I do think he's aware that it's hard to, it might not be difficult to topple someone, but it's difficult to get the results that you want. And then, look, I think Trump is so focused on tariffs and his tariff policy. He wants, gunboat diplomacy, yes, but I don't think he really has a plan for Venezuela yet. And so I think that will simmer on. There are risks that will, in my view, cap energy output. But I'm not sure. I'm not sure that they're ready for regime change. Now, as for the Maduro government fleeing, I mean, that's if there was a safe haven, that was one of the ideas on the table at various points, I believe, over the last few years. Now things look more serious now, but yeah, it's not clear to me that Trump has a plan there. I mean, speaking personally, a political strategy on the government reopening might raise some questions. But as somebody who spent an extra 5 hours in a U.S. airport yesterday, I will be glad for a point when people are back to being paid, and as Omar said, that we can focus on the fact that policies are not getting food is too many people live in food deserts and can't afford other dynamics. But again, it's not all about me and my travel schedule.
No, clearly, but nonetheless, it's not an insignificant factor because, of course, behind every airplane is a not only the passengers sitting upstairs, but is a whole slew of cargo downstairs with your
Exactly.
box of Tweeties and whatever else need to move from A to B. High expensive courier transport in the airline industry, I think, where they make most of their money. So
Correct.
when you have thousands of flights a day suspended, that does create, particularly running into Christmas shopping season and all of that stuff, there starts to be some real economic fallout. Mark Otzwald, Chief Economist and Global Strategist at ADM Investor Services International. Just looking at the wider macro global picture from the point of view of where we can get some North Star direction here, we saw again China's oil imports last month looking rather robust at above 11 million barrels a day. Your thoughts on the outlook for that, and that continue to be a key pillar that keeps this Brent crude oil price tugging on $65 a barrel?
Well, it's certainly helping on that front. There's no question about it. One thing I would add to comments made earlier is one of the reasons we've got a bit of a risk-on attitude is not just this news relating to passage of the the bill to on U.S. spending. It's also because we're over the worst of the earnings season, and suddenly all the single stock volatility has dropped off, and that basically puts a firmer tone to the equity market. By the by. In terms of China, yes, there seems to be absolutely no end to this restocking. At
And why
some point,
wouldn't you? At $60 Brent,
yes,
China's happy to buy it and
yes,
discounted other oils.
and that is the usual Chinese tactic. Buy cheap. That always has been. It's never anything to do with the economy, so it doesn't
Mhm.
tell us anything about the Chinese economy. It is interesting to contrast that with trends in other commodities where Chinese purchases have actually dropped off quite sharply, which within the context of the metal sector is
Mhm.
unsurprising because prices are actually quite high. So, yes, the Chinese purchases are important for the oil market. Uh, but on the other hand, what we've got is a situation, particularly that we'll see at the end of the week, the Chinese economy is not firing on all cylinders, but elsewhere, one would have to stress that the strength of growth, and this is both in terms of domestic growth and international trade, has actually been impressive throughout this year. It's not been, we're talking about global trade in real terms, growing by about 2.5 to 3%. And as much as there's doom and gloom for next year of 0.6, that's where we started this year as well. So, and the trade within Asia, with it, the trade, when one looks at, for instance, China's steel exports to Saudi Arabia, to places like Nigeria, South Korea, they're all growing very robustly. So international demand is doing okay despite all the disruption from trade tariffs.
Omar, on that point, I mean, it's sort of the surprise of the year. We've started the second quarter with the infamous Liberation Day tariffs that sort of sunk everything by 20% and then recovered. But the expectation was that the domino impact of all of this turbulence would feed through to economic growth and inflation. That's not happening. Enough that keeps everything more or less where it is. Is there anything on the horizon that says, no, this is going to be a lift off to somewhere higher, or this is going to be, a trigger to go lower? It seems the status quo holds, surprising as it may be, but nothing to lift it out of either direction. Your thoughts, is there anything you see that lifts this in either direction or pushes it down?
No, I think the tariff stuff. I mean, the tariff stuff initially was to do with one country, which is China, right? And now that's all been rolled back. So they've lost the tariff thing. I don't expect the tariff thing to be making a comeback. I think that's basically finished. The next thing you're going to see is the U.S. Supreme Court rule, basically. And if you look at Polymarket, the ruling is that he's going to get a big no. So I think tariffs as an idea is done. That's my point of view. In terms of what's going to push us out, people tend to forget, this is winter. People need to forget that the reason why is the US all of a sudden, interested in, bringing democracy to Venezuela and Christians in Nigeria that happen to be the largest oil producers. And basically they want to try and defeat Russia, which is again major oil producer, major resource, whatever. My opinion is that they need to recapitalize their economy, because you can forget about it. All they're going to do is print more money. They have one hope, which is basically productivity increases, which they call AI. I think personally that they've already lost that to China, simply because China is producing so much more power. So you can forget it. I mean, it's really, I love seeing all this, smoke and mirrors and jumping up and down and Trump taco this and we're the greatest and we're the whatever. But I mean, I think that you're seeing the slope of descent, not only of the US, but the accelerating descent of Europe. And it's irreversible, and we just got to get used to it. Now, where's oil demand coming from? It's certainly not coming from Europe. It's coming where it has been coming from for the last 20 years, which is Far East, emerging economies, all that kind of stuff. They had a brake put on them by Europe saying, yeah, we've got to go green and green and green. But now these economies don't care, because what they want is cheap. They don't care about green. They don't want to invest in, solar and wind and all this kind of stuff. They want cheap oil. And so this is why oil demand is so strong. With a weakening dollar, you have stronger emerging market economies. And basically you have a refocus from, paper to real assets, hard assets, gold and commodities as a whole. And I think cyclically, commodities are going to go up in a big way, oil included. And I think that you are seeing inflation come along. And I think also one of the biggest things that you're seeing is this discontent in the US. 75% of voters under the age of 30, 75% in New York voted for Mamdani. They want change. They don't want this kind of ongoing. We're going to Venezuela. We're the biggest military. We're the best. The economy is doing great. It's not doing great. It's doing terrible. So that's. I think you're going to. Yeah.
Let's bring in Rachel on that. And just Rachel, I was reading your Substack on China. The sort of the where are we in the trade war, the Trump-Xi trade truce détente. I wanted to get your thoughts on that, and just picking up from Omar's comment there that, the trade war is dead now, the tariffs are no longer. Your thoughts on that as a theme and the reality today is the 10th of November is the day or the 10th of November is the day in which tariffs on Chinese goods go back to 10%.
Well, they go back to one of the tariffs on China goes back to 10%. There's another 10%, and then there's everything that Trump won and Biden did. So you
Okay.
go to 47%, which is a
Okay.
lot better than 57%. So I sort of disagree with Omar here about tariffs being dead. And I think, he's right that the Supreme Court might, rule at least in part against Trump. It definitely is headed that way. I think, it's hard for me to predict the Supreme Court these days, but I think, we only have to see sort of Trump statements on social media in the last 24 hours to say that he's not given up on tariffs as a tool. Can he use them in a meaningful way on China? I think China has shown that they have a lot of powers too, especially on rare earths, and the U.S. is not going to get very far on most of these supply chains is processing in the next year, especially as the U.S. Is competing. It pulls back about whether they focus on their own domestic production versus with allies, and so I do think if anything, Trump is trying to build a political coalition to support tariffs again by promising these dividends. Now, of course, if Trump, that's a really inefficient way to redistribute funds. If he really wants to lower prices, he could just drop the tariffs, but I don't think that's how he looks at it. So I see him doubling down on some of the sectoral tariffs, using other measures of the Trade Act, trying to maintain the tariffs. I think we're still seeing some inflation, coming through. I think the sort of the Christmas period and so on will be very important. I'm really watching real underlying demand here. I think that we see a dynamic where, yes, there's a lot of items going to to other countries. But where is the final demand in the global economy? The U.S. still has this very sizable current account deficit. So if China exports to Vietnam and then Vietnam turns and adds some value and exports to the U.S., you still have an underlying imbalance. And I'm not sure we've gotten away from that. So I think it's a truce, maybe, and it's a question of who uses this time as effectively. The other thing I would just say is cheap energy matters, but I wouldn't count out solar as a source of cheap power. We're seeing Pakistan buy less LNG because of solar going in. Now, some of that's because LNG is very expensive right now as Europe scoops up what they can get, and we'll see how the winter goes. But I just see this as a story where the renewables that go in are going to be because they're cheap and they're effective, not because
And
it's
they're also
necessarily climate.
and they're self-reliant. They give you that sense of energy security and not dependent. Ultimately, that's not insignificant in certain countries. Mark, looking at this track and now a few weeks in, I wanted to get your views on the Gunvor Russian attempt that was knocked on the head, but also on the idea that Russian oil flows can continue to move despite these sort of next layer of sanctions. Your thought on that sort of supply side?
Yeah, I mean, first of all, in terms of what's being done in on Europe, because Europe in all of this is sort of like very important outside of China. Um, I think there's a good reason to sort of go, hold on a minute, we know actually what this story is about EU Russia trade. It's not just oil, it's anything else. And that is, it's basically been rerouted. So as what you see it above all in the export data from Germany to countries like Uzbekistan, Tajikistan, Azerbaijan, wherever you want to think within Central Asia. It's up 150 to 300% over the last few years. That's basically just circumvention. Why wouldn't it work the other way around? It would be my question. And the answer is, well, it will work the other way around. Yes, there'll be some. So the supply from Russia to Europe is not going to be that badly impaired. And Europe is simply not, I mean, the EU above all is simply not united enough to do the right thing. And you've still got people like Viktor Orban getting this concession from
I
Trump,
mean,
even
if
though
you're
I think,
India and China looking at that Orban piece and Trump giving it a bypass on the Russian import, how can you take it seriously? I mean, it just seems the exception makes the rule, right?
Absolutely. India and China will only look at that Orban exception as saying, well, okay, just carry on, guys, as we have been, take a little bit of care, but
Yeah, be careful of the paperwork. Let's go to the survey question and get a view on a sense of direction here for the rest of the year. It's a short window of only 6 weeks, but trying to see if is there a narrative that we're going to grab a hold of here. The end, what will have greater bearing on direction of oil prices through the end of the year? The end of the U.S. government shutdown, if indeed they get it across the line in the next few hours. OPEC plus supply increases, of course, are continuing every month through to the end of the year into January. And if indeed we start to have a sense of supply, again, this infamous supply glut that doesn't land, but China oil imports continue to deliver robust numbers above 11 million barrels. That would be quite a big indicator. Or the outlook for the trade war. Which of these four do you think? Of course, they all are tug-of-warring with each other, but ultimately, which do you think has the greater bearing on the direction of oil prices through the end of the year? Omar, looking into this window as we go into it from a technical trader point of view, you haven't hung up your Christmas decorations yet. You're not wearing your Santa Claus hat. Are you and your peers going to exit left early? With the nature of this market, it's not one to hang around in during the holiday thin trading season. What's coming up soon now, this American turkey holiday, Thanksgiving and stuff.
No. I think there's a lot of opportunity. I think cracks are moving higher, so products are moving higher comparatively to crude. Refining margins are going up, which is again quite interesting when the EIA says there's a glut coming and tsunami over the horizon, all this kind of stuff. It's ridiculous. I mean, honestly, it's like everything is fake news. The same kind of stuff that we're hearing from, Venezuela, we're offering to resign.
I mean, everything might
he's
be
offering
fake
to go
news, or else it's also just incompetent. I mean, the research or whatever is the data or whatever. I mean, maybe people are just doing the homework wrong.
Yeah, they just make it up. I mean, all of it is just made up. I mean, we have no clarity, for example, on what China buys or doesn't buy or stores. We can just estimate, but we've got no idea. And people just, like, oh no, they're going to buy this, they're doing this, I don't know what, blah, blah, blah. We have no idea. We have no clue. So I think basically this is why we like to concentrate on one thing, which is the price. Once you concentrate on the price, all the information is in the price, you have to assume. So all this information about, tsunami, filling up, wars, whatever, is in the price. So if you look at the price and you look at basically the structure of the price, you can maybe forecast what's going to happen. So we like to look at patterns, that kind of stuff in the actual price and not count cargoes. So we think higher.
Rachel, a question there on data and research. I mean, it's between the IEA and OPEC in recent years, we've had massive divergence, but also more specifically now with the shutdown of the U.S. government over the last month and a half, we've had an absence of the usual data points being published. What's the outlook for that returning? What's its absence meant? Your thoughts on that?
Yeah, I mean, I think the absence has meant that there's even more of a black hole. Omar talks about how rightly how China, China, there's a lot we don't know about their demand. We see in this context of much and more sanctioned crude, a lot more supplies coming from countries that are not reporting. We have better tanker tracking, sort of data that helps us with that opacity. So, but the fact that the U.S., EIA is not operating or has not been operating at full levels is a black hole, and especially on the macro data side. This past Friday was the first one in many decades where we didn't have a labor market release and we didn't have all these other dynamics. So while the shutdown itself may not have had a big macro impact. There will be that uncertainty. It will take time to, even after the government is reopened, to restart that process. And there was data that just wasn't collected. Now, I think this damage from the shutdown just reinforces the trend where we already saw cuts to capacity and data collection. And this comes at a time when, if anything, we should be spending more on better data. So I think it will only reinforce the trend that big private sector actors will pay to sort of develop their own data, and information asymmetries are only going to increase.
Rachel, I just wanted to follow up and ask you your thoughts on this moment of the last few weeks and what it's. I mean, I've seen some reporting and maybe wishful thinking, inevitably by many, but that we've kind of witnessed a peak Trump window as we come to the end of the year. The reasoning on that is that this shutdown was a big problem for him, and in the shutdown was the Republican Party in the Senate refusing his pressure to abort the supermajority requirement. Also, the sort of China, we're back to where we started kind of thing, all this noise on China. He looks a bit impotent, and most surveys indicate Xi won that round. And as well as the sanctions on Russia, which is what the Republican Senate have been calling for some time, to have these added sanctions on Russia, not allow Trump to play into that Putin narrative. All of those things combining to look at Trump as we ended the year, and the US election results last week, of course, I must add that. All of those things together start to kind of feel like peak Trump. Your thoughts on how to interpret all of that in the one bucket?
Yeah, well, I mean, his economic policies have definitely don't seem to be popular, and I think it's notable, especially this, in a sense, some of the arguments that won him ultimately the election last year, issues of affordability, are those that are leading, that the Democrats were able to play in this round, select elections. I mean, we'll see how that plays out. Oil prices may be down. We'll see if they sort of come back up, but a lot of other food items and so on are still up. So that's a challenge. Now, I don't think, if anything, though, he might try more threats and other sort of dynamics. I think that there's an erosion of U.S. institutions that is happening in this context, which we'll have costs ahead. On the China side, yes, China made fewer concessions. The U.S. had to back down. But I think the proof of it all will also come in what happens with some of the big, for example, AI build outs, the investment plans. I'm in Seattle in part to be talking about AI. I think one of the things I worry about going forward is we have a U.S. economy that is, if it wasn't for AI and data center build outs and imports, business investment would have flatlined. So I think there's some real challenges for the U.S. ahead. And it's not clear to me that Trump is going to be fully sort of impotent in the face of those challenges. We could see more threats and other dynamics that at least lead to volatility.
It certainly seems like the weight of the bully pulpit, the big stick threat is perhaps saw its day. Mark, last word to you to get some understanding here, some split across the board on what this might be in the direction of travel on the oil price, OPEC supply pipping. But I want to get your thoughts. Just where is Europe at the end of this year as we go with the war in Ukraine? I saw articles in the newspaper over the weekend that the defense spending in Europe will be the catalyst for economic growth in Europe moving into the new year. Where is Europe at vis-a-vis the war in Ukraine as we come to the end of the year and winter descends?
Well, I think Ukraine is in a bad place. The Russians have managed successfully to take out a lot of its electricity production, which is obviously going to do it a lot of damage in terms of producing drones and armaments. The support it's getting from the West is not as strong as it needs to be to basically push back Russia. And Europe itself, or the EU above all, is not united. There are very disparate trends in some countries. The support for Ukraine is waning actually quite quickly. Poland is definitely one of those. Um, and there is, on the other hand, this hope that Europe will spend more on defense. Yes, in Germany, it's all been earmarked in terms of billions and billions, tens of billions for it. I would question how effectively that will be spent. The history of Germany is one of a planning disaster where, say, a third of funds which are earmarked for whether it's the energy transition, whether it's this defense spending project or anything else to do with infrastructure, are wasted. And planning laws haven't been reformed. So overall, I think Europe is in a similar place to where it has been. Growth will continue.
What about the narrative, just to pick quickly up on we started the year with Trump beating up on Zelensky and you thought Ukraine were dead. We sort of end the year with the opposite, that yes, the West is not doing enough for Zelensky in Ukraine. They never have, but at least they're not doing the opposite of enough, i.e. the Trump sort of Vance outlook at the beginning of the year was they were going to abandon Ukraine. That now seems to be off the table.
Yes, we're basically in a stalemate. And in any case, I'm not sure in terms of the energy demand, particularly coming out of Europe, how relevant this is, because Russian supply to Europe, okay, it will continue to go via third countries too who are willing to buy. But overall, it's not going to make that much difference. And Europe's growth outlook is, yes, it's not doom and gloom, but it's going to be tepid. Is the EU going, is the Eurozone going to see growth of 2%? No, it's not. We're talking about military medium 0.5 to 1. And there is a risk that some of the big spending plans, particularly in Germany, meet with a lot of disappointment, which I think is the bigger risk going into 2026.
And just to wrap up on that, some news over the weekend of the UK supporting Britain with some this kind of ongoing drone incursions into northern European countries from the North Sea and the Baltics. It's drones being flown off of Russian ships to sort of torment northern European countries. That seems to be the narrative. I obviously have no idea the truth or untruth of it, but that does seem to be another layer of this problem that is, you would imagine, only going to increase if indeed we do see a real divorce between Trump and Putin. We'll have to leave it there. Oil prices trending a little bit up this morning on some optimism that the U.S. government shutdown will end and bring some hope to economic clarity going forward. But ultimately, Brent still stuck and sticking through its $65 handle. I mean, it's trading below that now, but it looks like migrating back up to that center of gravity where it's been for some months now. We'll wrap it up there. Thank you so much, Rachel Ziemba in the United States, for staying up so late, and Mark for getting up so early in Europe, and for Omar just getting off the beach and joining us every Monday morning. Really appreciate it, Omar. All the best. Have a great week, everybody. Take care.
Bye, everyone.
Thank you.